Signals are a very important part of the day trading Visual Basics system, and a lot of dollars can be lost both in the entrance and the exit of a position. And so this video is about signals, or primarily about signals down. And I will make a few comments on some up activity, but primarily this is about those signals that we identify stuff going down. I've got 4 vertical lines, yellow, green, red, and pink. And this doji candle right now is August 14th, 2017, as you can see by the data window over on the right. And I have 2 daily charts, the trend chart here in the middle and the power chart under it. Over on the left I have the price, zip, and swing chart, and the one on the right is the weekly chart, and of course the 4th window is the data window. Now I'm going to start right with the green vertical line and just identify some things that we see. And I start here because if you notice the average candle length of the last 10 or 12 days or so versus what happens after the green candle, after the green vertical line, then it's a significant issue, because the day after the green vertical line we have a huge red candle. I've taken off some of the some of the band lines on the chart so we'd have a little bit more visibility. And there's some dashed lines. The green is the 20 moving average. The blue is the long-term moving average. The 50 is, or the red dash is the 50 moving average. The white is the 100 moving average. Some of the key things that I'll have you notice is that we have trend gray is highest, and that's significant when you're talking about what different things are happening. When I make reference to a particular line being highest or lowest, there is a reason for it. They seem to just have more power when they're either highest or lowest. And so I'm looking at a divergent condition here as well on the vertical green line, and that is trend gray is up and trend green and red are down. Also in this situation we see that red and green are both under 0, but more importantly they're both under the trio lines. So there is a divergence between location on the trio, on the trend gray versus the red and green, and as well a directional difference, meaning trend gray is up and blue and green and red are down. We also have the same thing in the power chart. If you notice, we have power Zion up, and all 4 power lines, yellow, white, pink, and blue, that's the power 4, they are down. Now that is directional divergence between Zion and the power 4, and that is also one of the key shape patterns within the proximity group when you're looking at 3 gap patterns, 4 gaps. And so we don't have everything that we need to achieve a gap on the day after the green vertical line, but we have a lot of information there. We have a mixture of other things that are going on as well. On the vertical green line on this day in the left chart, we have swing Zion down and swing pink up. Now you know swing Zion is your price barometer, and swing pink is leading indicator. Swing pink and swing pink and trend red. I said that wrong again. Swing pink and zip red are your two quickest indicator lines in the system. Pink will probably move faster than zip red, but zip red has much greater line length to its movements. Zip red will move from 4 to 94 over in one day. And the price won't move hardly at all. But we know what's going to happen after that, or based on conditions we know. And so what we've got here on the vertical green line is divergence between swing pink up and swing Zion down. We also have the yellow twins. Zip yellow is on the vertical green line day is highest going down, and power yellow is highest and going down. And that is a great indication. When we have the yellow twins highest and going down, you're in a downtrend. And so we have a couple of divergent situations between zip pink and zip Zion. Also, we have a significant divergent condition, between the, as I mentioned, between the trend gray and the trend red and green lines. Note also that it's normally divergent between trend gray and trend red, but it has a lot more power if green will follow the red. So in other words, green is down and red is down, and those two are following together while trend gray is going up. Now, if you get trend gray up and green up with red down, sometimes that can be a weaker form of divergence. But one of the key things that you want to look at here when you're looking at lines is, if you go back to the pink line in this particular example here, you have the trend trio is now all going down. So in other words, the day after the pink line, you are now in a TOC pattern in the trend trio group. And that's a significant change in pressure, in price pressure, okay? However, you will also note that the next day it did go down, but the following day it went back up. And if you follow along and you understand the up touches and down touches of the system, you can see that if I move the pink line, let me do this. I'm going to create another vertical line, and I will put it right here, and I will change it to a pale blue line. That pale blue line is the trend red is down touching yellow, the trend green is down touching the pink, and trend gray it's not running parallel with the pink, but it's running right under, which is usually indicative of a next day up. And so and especially you basically have, even if you see the logic in that, that's fine. If you don't see the logic in that, you will definitely see the logic in trend gray on the vertical blue line having a low angle line position, which indicates that it's going up. And so it's pretty flat. Trend gray is 9.1, and on the pink vertical line, trend gray is 9.2. So it's dropping down just a little bit. But it goes up on the day after the vertical green line because we had these down touches, primarily in the, or what we see on the trend trio lines. The trend gray, red, and green are your fast lines, and they are the lines that down touch onto the trio line, blue, pink, and yellow, and the zero line, and they go under zero. And then, of course, the last one is a sky touch. And when I say the last one, what I've just described are the 6 down touches when you're doing a gap analysis for an up for a gap up. The opposite is the case when you're looking at gaps down. Also, in the trend gray line, it is highest, and it's basically running straight across. But some of you have already noticed that your trend gray is in a head and shoulders pattern, which is indicative of a stronger down movement. But keep in mind, we already know this, that it's headed down, but we can see that in the fact that the blue line has dropped tremendously over the last 6 or 7 or 8 days when it turned. And remember that the blue vertical line is the light blue vertical line is the first day that the trend trio did a TOC pattern and started turning back down. We also know that the trend trio, blue, pink, and yellow, move slowly, and so it takes a lot of movement to move them in one direction or the other. But we've basically hit the peak here in this condition as far as the trend trio is concerned. Remember, the trend trio is one of the 3 groups that identifies the uptrend or the downtrend that we use to trade. We don't use the long-term trend line in the candle chart. As you can see, that blue line is going up constantly here. It's still going up at the vertical green line. And so we don't use the long-term trend line to trade, but it is a good line to be able to glance at and see what things are potentially doing in the market. And so also the other 2 groups are your orange, green, and red. You can see them going slightly up here, going right through. And then, of course, your swing red and green over in the swing chart. And keep in mind, red and green never cross. They always will go green will always be on the bottom of red. I will point this out also when you look over here on I'm going to create another another vertical line, and this vertical line is right here. I will change that color to a gray line. That gray line right now is on the day when swing blue crossed under swing red. Again, if you're not familiar, this is one way that we can tell that we're starting into a downtrend. And again, if you're not familiar with it, the swing blue line is your crossover index line to an uptrend. It was originally built that way. Yellow, the swing yellow, however, moves much quicker than the swing blue and gives us more information. But again, we're not looking for trading direction based on the swing blue line or the swing yellow line. Those lines are or at least the blue line is much slower. It's in that category with red and green, swing red and green. And so we look at the swing blue more as an identification situation. And this, if I move the gray over to here, this green candle that we see right here, this is basically a rally in a downtrend. And so and how do we know that? We know that through the zip, or the yellow twins, zip yellow and zip and power yellow. We can see that down here. One of the other things that you can identify that with is you've got what we refer to as a poke out or a stick out in the in the swing Zion and swing pink. They both poked their nose out up above all those other lines, the red, green, and blue and yellow of the swing chart. And oftentimes when that happens, they do that and they come right back down. Excuse me. Another indicator that you can look at to tell that you're going down is you got swing Zion even though we only trade swing Zion when it's highest or lowest, we can see swing Zion is passing through all the other indicators, and it's going down, 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 down all the way through this, in telling us that the buyers are leaving the stock. When when Zip Green is at 0, there's a lot of people leaving the stock. When Zip Zion is at 0, there is a huge number of people leaving the stock. But when it's dropping, it's also telling us those conditions. Zip Zion is your grandfather to the Zip Green. Zip Green reacts quickly. Zip Zion is more slower and gives us information on a slower average. The other thing that I'll point out here too is on the day that we had the, I will move the vertical blue, light blue line over to the green candle here where we had this rally. On this, I'm actually going to change this to gray so it's corresponds with this other gray line over on the other side. So the two charts both show gray. This gray vertical line on the trend chart is in a trend gray highest peak. It is also a condition in which the power red has crossed over the 0 line, and as important, crossed over your main power lines, your power orange and green lines. Because it crossed over, we got a really nice green candle, and that happens a lot. When it crosses over or crosses under, it will give us a nice green candle. If you go over here the day before the red vertical line, you can see that the power red crossed under, but the trading that day did not stay low. It had a real nice long lower tail, but the price went back up before close. But again, if you were trading, you could have picked that off right away because you identified the fact that power red had crossed under 0. Now, the other thing that I want to mention here is that if I take this yellow line and put it right there, the yellow line represents the day that the power red crossed under 0. And that's significant because if you're not familiar with it, power red is your position, your best position indicator. In other words, positionally or from a location perspective, it is above 0 or under 0. When it is under 0, price tends to fall. When it is above 0, price tends to go up. That is true with all the other power lines as well, but power red is more significant. When it crosses under 0 on the vertical yellow line day, that's telling us that it's going to be going down. And on the green vertical line day, the power red is showing us that we are in a low angle up, and this is basically is going to be a next day up pattern. Okay, and so we have a conflicting situation here in the power red, but we also have, if you relate to this or understand this, power red is not at -1 or -0.5. Power red is deep at -3, and it takes a significant amount of energy to pull it across the 0 line from a -3 position. And so we see the opposition force that has formed in the power red, but we also know that low angles down can turn into a bottlenose pattern, which it does the day after the green vertical line. And in fact, that continues into another low angle line the following day. But there's obviously much more power in the trend blue, pink, and yellow lines. They are heading down. There's much more power in the fact that trend red and green are under zero. On the gray vertical line, they did an up touch. Red is just over the pink line, so it's like an up touch pink, and the green is up touching the yellow, and then of course the gray is on the peak. But one other thing that I want to point out here, and that is the difference between, right now, the difference between the, excuse me, the red vertical line to the gray vertical line is a BOC higher pattern. And we call this before the peak pattern. We obviously have divergence in a power, excuse me, we obviously have divergence in a BOC pattern on a peak, because a BOC pattern is normally a regular movement at the bottom of a cycle pattern. Likewise, going on the other side between gray vertical line and the green vertical line, we have a BOC lower pattern. And a BOC lower pattern, and obviously this has formed into this head and shoulders pattern that I'm talking about, but the most important part of this is to relate to and understand your strength in your power of your movements. When, for example, the trend red to trend gray is a BOC higher pattern on a peak, which makes it divergent, which is indicative of telling us, because we're on the front side of the peak, it's indicative of telling us that it got pushed too high. And why is it doing, and how is it doing that? Or how is it telling us that? That's because we're in a downtrend. Since the pink vertical line, we've been going down. But the bulls have just been, it went 3 days down right here in the middle of that, or with this red vertical line, 1 day on each side of it. But then it got one final push by the bulls, and then after that it just crashed for 4 days. But when we can easily recognize that situation, because we have that real strong push on the gray vertical line day, creating that BOC higher pattern, and then we also can identify that on the gray vertical line day, the things are going to go down because we have the up touches. We also now, on the day after the vertical green line day, we have everything's still going down, and now trend red and green are below the trio lines, but significantly as important is that trend red has crossed under the trend green line. And when it crosses under, when trend red is under green and they're going down, you're in a downtrend. And when trend red is above green and going up, you're in an uptrend. And so there's just significant signals here that will tell you that this thing is continuing down each and every day that you're looking at it. And then of course this one here is on the vertical green line day. This one here is much more powerful, because yes, we can talk about the head and shoulders pattern, and that's important in the trend gray. But look at that. It doesn't show up in any other pattern. Not one. And so that is significant in itself in watching trend gray. But it also, if you understand the pattern, you think, well, trend gray is is the best indicator looking at this. But also when we look at the trend gray, we can see the head and shoulders, but we can also recognize that both trend red and green never had enough power to go back up. They were driven down on the vertical green line day, which is a minor red candle. The close on the vertical green line day, as you can see, was $14.55. The close the day before was $14.60. So it dropped down 5 cents, but yet there was a huge identification of a downtrend occurring on this vertical green line day. And likewise, the same thing occurred, or some of the same stuff occurred over here in the other charts. On the gray line, on the gray vertical line day, we have zip yellow that's gone into a pink, and zip red and pink and blue have bounced up against the zip yellow. And zip red is not highest, I don't think. Yellow is 90, zip red is 85. And so we still have zip yellow highest on a peak. And the following day, note the separation between zip yellow and zip blue. On the gray vertical line day, zip yellow is 90 and zip blue is 82. And on the day after the vertical green line day, excuse me, I said that wrong. On the day before the vertical green line day, zip yellow is at 76 and zip blue is at 50. So they were 8 points apart on the gray vertical line day, and the next day they were 28 points apart. So I mean, that's like 4 times the difference, you see, and this is the area, this is what we refer to as diff divergence, D-I-F-F. It's a difference in lines or difference in positions, or however you want to think about it, but it's a form of divergence. And when you get a huge movement like that, it tells us something significant. Keep in mind, divergence does not necessarily tell you price direction. It does tell you that something is going to happen. It basically identifies or tries to identify, or excuse me, it basically shows us an opposing amount of force within the stock at that point in time. When you have multiple indicators showing divergence, then you have significant increased significance in the push or in the opposing pressure, because now there are 2 pairs of lines in divergence that are showing us opposing pressure. And I use pairs loosely, because when I'm identifying with pairs, I think of, for example, I think of trend red and power red as a pair, but they're not paired when I say matched or synchronized. They're paired from the perspective of how they react together, because trend red and power red are 2 of the big 3, swing Zion being the 3rd one. And those 3 together, when they have forces moving equivalently or equally, in other words, when all 3 of those are lowest and in a BOC pattern, you are likely to get a strong movement, 1 or several days. And typically when the big 3 is in a BOC pattern, all 3 of them at the same time, you get a stronger uptrend, 3, 4, 5 days. Not always, of course, but that's can happen a lot. And so these are the ideas, or some of the ideas, that I wanted to make you aware of as far as signals are concerned, specifically signals going down, because sometimes we have a tendency to miss how the signals are there, and it's easy to do if you're not familiar with the system. So this is a good reference video to come back to for signals down.